Hello, this is Ahura, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 29 of 2025. As always, first let's check the previous week and see what we had previously, and then we can go forward and check the week ahead. In the US, we know that the 90 days pause of Trump tariffs finally ended. 20 countries, they got the letter that the tariffs were going to start from the August 1. More than 20 countries had this notice. The sectors, I mean, there's so many goods, especially Cooper and the pharmacies products, they're gonna get the more tariffs between 20 and 30% from the most economies, especially with the Canada, the country right after the United States in the north. Also, we had uncertainty in the market towards geopolitical tensions. We know that the things between the Russia and Ukraine is not going so good. The American again they started to selling their weapons to the Ukraine against the Russia. That's a little bit changing the things in the Middle East and the Eastern European countries economy, especially in the economy, also can affect the European economies as well. Generally, the things that we had, it was not a little bit, it was a little bit confusing about the geopolitical, especially about the geopolitical tensions, which support somehow the gold price as well. In the United States, we had also the business optimism that slipped a little bit as small business indexes slowly fell, which means that right now the small businesses they have less optimism about the business, about the future, and especially they're hiring slowly, slower. The credit that you're getting from the bank slightly is so generally these data means that a little bit cautious in the U.S. economy could be expected, especially in this quarter, in the third quarter. However, the earnings also can start, which started from the previous week with Delta Airlines, which it was very good. These earnings in the week ahead, maybe they can change the business sentiment, but still, I don't think that they can change too much in the to make it too much change in the small business confidence or small business index. But still, in a big businesses in general economy or for the macro economy, it could take this earnings reports could be positive. Out of the United States, in Australia, we had the interest rate decision while we were expecting the Central Bank of Australia or RBNZ or Reserve Bank of Australia to cut the rate by 25 basis points from 3.85 to 3.60. They held the rates steady at 3.85, mentioning that the inflation risk is high for now and they need more time to make a decision. Same thing happened in New Zealand as well the next day, on Wednesday. But thing is that in New Zealand we were already expecting for the holding the current rates and not making any change at 3.25%. In UK, the very disappointing data from industrial production, manufacturing production, GDP, and all these data, economic data which we had, and they increased the chance of rate cuts for the next BOE meeting. We will talk about that later because in the weekend also we have so many important data from United Kingdom. In Latin America, we know that the Mexican CPI or inflation in Mexico and Brazil increased, especially in Brazil, while the central bank somehow they ended the interest rate hike cycle and they were planning it, but holding the current rate and starting the rate cut with the inflation at 5.35% is kind of a little bit confusing right now, and probably they're going to be more cautious about cutting the rates for the next meetings. Week ahead, but in the week going forward to see what we have in the week ahead. Week ahead will be the inflation week, while the earnings reports also will be very important, especially on Tuesday and Wednesday, where we're going to have the BOE Bank of America, we are going to have the Citibank, Goldman Sachs, and all the most important and the major banks that we have actively in Wall Street, not just in United States, not just America, but generally like HSBC Bank and so many other banks that they are actively working in the US market. So generally the week ahead, especially about the earnings, it's gonna be very important week. Generally what we are expecting to see a little bit positive sentiment from the earnings as the overall data is supposed to be the earnings supposed to be positive, as same as things that we had for the Delta Airlines. So if we are about the earnings report, we're somehow positive, which means that if inflation data and geopolitical tensions put the pressure on the stock markets, that downtrend could be softened by earnings, even if so. So we will talk about the possible prices in the stock markets. On Monday, we have inflation. We have inflation data from the China we had previous week. We now have inflation still in negative on the annual scale. On the monthly scale, slightly got it a little bit better. That means that I mean, comparing with the previous month with the 0 point with the negative, with the -3, -5, -0.3 or -0.5%. These numbers that we had previous week a little bit positive because a little bit better compared with the previous month, which means that already stimulus packages that the central bank and the government in China they had in Beijing, it can somehow support the economy to a little bit to improve. So in the week ahead, in this week on Monday, we have data, the export, we have trade data, some like export, import, and trade balance. We expect to see both import and export to increase a little bit. Especially the import, increasing the import means that the domestic demand also increasing, so they're going to have more the imports after 2.4% falling in May. In June, we expect to see the imports to increase 1.3%. The export also supposed to increase around 5%, a little bit more than 4.8% in May. On Tuesday, again, from the China, we will have the GDP numbers. We know that the GDP in the first quarter increased by 5.4% in the first quarter. For the second quarter, we expect the market expecting to see 5.2% GDP growth, which can be very good data. I even thought it's a little bit lower than the previous quarter, but it can be very good number for the second quarter. Industrial production and retail sales also both expected. Industrial production expected to slow down a little bit, but the retail sales can slide down or slows a little bit more than a little bit from 6.4% to 5.5%. But industrial production is supposed to slowly down from get down from 5.8% to 5.6%. Generally, the data from China a little bit more brings more probably more cautious in the market. But out of the China, other data that we are expecting from other developing economies, they're going to be somehow the positive. And after the previous week's light negative data that we had, mostly disappointing data that we had this week, we're going to have some positive numbers. Later on Tuesday, we're going to have the ZEW surveys from the Germany and Eurozone. We expect to see both from in Germany and Eurozone, the sentiment, economic sentiment and expectations, both you expected to see a little bit more positive compared with the previous month in the Eurozone. ZEW survey for the economic sentiment supposed to increase to 37.8 from 35.2 that we had in May. Generally, that's a little bit, as mentioned, a little bit positive compared with the previous weeks. In Canada, we're gonna have on Tuesday, we're gonna have the inflation numbers. We expect to see no change in the Canadian inflation with around 1.7%. The inflation is supposed to be flat in Canada, but in the United States, things are a little bit different. We expect to see both, which is that's the most important event of the week, US inflation. Both headline and core inflation, we expect to see 0.3% increase for both of them after 0.1% increase with both of them that they had in May. This month, we expect to see inflation to slightly increase more, which means that the headline inflation on the annual scale is supposed to increase to 2.6% from previous 2.4%. And core inflation is supposed to increase to 2.9% from previous 2.8%, which means that if we see these numbers, or even somehow there's a chance of higher numbers, if we see these numbers and a little bit higher, even it means that the inflation is still sticky, which means central bank can hold the rates for now, and the chance of the rate cut for the September, which was around 73% previous week, at the end of the previous week, at the beginning of the previous week, but at the end of the previous week, it fell around 60%. So now even the chance of the rate cut in September is getting a little bit lower, which means it can support the US dollar and put somehow pressure on the stock markets. Even though the stock markets, they had nice all-time highs in recent days. On Wednesday, again, from United States, we will have the producer price index, the inflation for the producers. We expect to see that also to increase by 0.2% on the monthly scale, and the annually I'd stay unchanged at 2.6%, which means still again the inflation is somehow sticky. In Britain or United Kingdom also, we're going to have the inflation numbers. We expect to see inflation to stay unchanged around 3.5%, the headline inflation, but retail sales expected to all the retail sales expected to slow down a little bit to on the monthly scale to around 1% or less than 0.2%, but I know the annual scale retail sales supposed to stay unchanged at 4.3%. That's on the annual scale, but inflation also is expected to by 0.2% on the monthly scale to stay unchanged at 3.5% for core inflation, and for headline inflation at 3.4%. Both of them supposed to stay unchanged. From Italy and some other European economies also, we're going to have the inflation numbers, but as mentioned on Wednesday, the US PPI will be the most important data, and UK CPI. On Wednesday, we're going to have the G20 meeting starting on Wednesday as well. It's going to be important. Previous week, we know that the BRICS had a meeting. They didn't have too much market moving news, but in a G20, probably we're going to have some market moving news, and we have to follow up this news and see what they are going to decide for the economy as the most biggest 20 economies getting together. On Thursday, we're going to have the export data, import, export, and trade data generally from Japan. They starts with that, continuing with the G20 meeting as well. But still, the export data from the Japan is supposed to be a little bit positive. After 1.7% export fall in May, in June, we expect to see the export to increase by 0.5%, while the imports also, after 7.7% fall in the June, in May, in June, expected to fall again, but with 1.6%, which means that the Japanese householders dealing with a slightly better, they're trying to slightly spend more monies, but not that much, which means still the imports also, the domestic demand is weak, and the imports also still getting negative numbers as 1.6%. In Australia, unemployment rate and labor market data supposed to be published. We expect to see the unemployment rate to stay unchanged at 4.1%. Generally, the labor market data is supposed to be a little bit positive after previous months' disappointing numbers. The labor market is supposed to increase slightly, which means if so, after this holding current rate previous week for the Reserve Bank of Australia, in the next week, in the next meeting, probably if these numbers gets a little bit better, in the next meeting they can cut the rates as the economic growth also is getting more challenging. In United Kingdom also on Thursday, we're going to have the labor market data where we expect to see unemployment rates to stay at 4.5% for Iowa, and claimant count rates at 4.5% and 4.6%. We expect to see unemployment generally to stay unchanged. But the labor market, that the important number is this average earnings. Average earnings supposed to slightly slow down, which means that the inflation is getting slower, while at the same time, because when the demand also when you have less income, the demand also come lower, and with the lower demand, you can expect lower inflation as well, for lower prices as well. So which means that average earnings supposed to increase by only 5%, including bonuses. Excluding bonuses, around it's increased by 5.2%, still unchanged from the compared with the previous release. So on Thursday, we're going to have the retail sales number from the United States as well. We know that the retail sales fell by 0.9% in May. In June, we expect to see this that flat or probably 0.1% increase, which means that the US consumers after May negative spending, because you know that because this was the main reason, because it was because of the April. In April, the pre-tariffs, before that the tariffs going to affect the buyers, they had more orders, which that's increased the sharply the retail sales. That's why in May we had a very big low numbers compared with the April. We had a very less buying, and that trend continue for the June as well. Now we expect to see the retail sales to increase by 0.3% ex auto, but the overall headline headline retail sales to stay flat at 0%. During the week, we're going to have too many speeches as well from the central bank's speakers. They're going to be also very important to watch. On Friday, we're going to have inflation data from Japan, where we expect to see inflation to increase to fall slightly to 3.3% for core inflation, and headline inflation to stay unchanged at 3.5% for the national inflation in Japan, which means that the most probably this even thought if it's slightly slows lower, but still more than 3%, and it's very higher than the central bank's target, which means that the Bank of Japan can think about the rate cut in next meeting, and that can be more serious. In Germany also, we're going to have on Friday, we're going to have the producer price index PPI. We know that the CPI was around 2.2% in Germany, and the PPI is supposed to stay around 0.1% on the monthly scale. On Friday, G20 meeting also still continues. In the United States, housing market data will be very important to watch, where we expect to see about the housing market, especially about the permits, building permits, to slightly slow down from 1,394,000 to slightly down to 1,390,000. So from 1,394,000 to slightly gets down for just only 4,000. We're gonna probably see slightly less permits. Housing starts on the other hand, supposed to increase from 1.1 million or 1 million in 256 units to increase to 1,300,000 units, which means that the housing starts gets a little bit more active and better. So which means that's also can be the effect of slightly lowering the 30 years bond yields, which we had in the previous weeks. Also, as for the inflation expectation and consumer inflation expectation supposed to increase around 5%. Michigan consumer expectation also, and especially consumer sentiment, which is very important, also slightly increased to 61.5 from previous 60.7, which means that generally the data we're going to have from the United States is somehow positive. Let's check the charts and see with these data what we can expect from the markets. As for the US dollar index, let me find my chart. As for the US dollar index, generally we know that the previous week's numbers and the geopolitical tensions and the trade tension slightly increased the dollar index from around 96 to more than 97.50, which means which we expect to see this trend to continue, especially if the inflation numbers gets a little bit hotter. Yeah, we can generally expect for now that the US dollar index to stay stable around 97, 98, 100 marks at this area. Stabilization is what we are expecting to see for the next week, at least for the dollar index. This stabilization in the dollar index and some slightly pressure on the stock markets and a higher inflation, these are the mixed signals for the gold market, which means that's why we expect to see the gold to get a little bit pressure, but it doesn't mean that the gold chart could be negative or the gold price could be negative. It can get some pressure, but not too much. On the energy front, oil increased already a little bit in the previous week with the data that we had so far in the market. While we know that the geopolitical tensions in between the Ukraine and Russia continues, that can be positive for the oil price. Unfortunately, the thing is that the IEA, EIA, and OPEC, all of them, they expect to see a little bit more supply in next years. But at the same time, we know that the rig count in the United States got a little bit lowest level since 2021, which means that 2023, which means that the balance of the demand and supply could be somehow unchanged, which means that the stable prices for the oil and energy should be around these prices. So not super higher prices or super increasing the prices and not lowering the prices. So the price expected to be around 67 and $70 as mentioned, because we have too many different factors and they are against of each other. They are not supporting each other to increase the price or put the pressure on the price. So these factors, they are against each other and they can somehow overcome on each other. So hold the prices at the current level. On the stock markets, with the as mentioned earlier, we know that we will have the earnings reports in the week ahead. At the same time, we have geopolitical tensions, trade tensions, and inflation data. Those factors supposed to put a little bit pressure on the stock markets. At the same time, the earnings, we expect to see generally the positive data from earnings that can be positive for the stock market. So again, here they are against of each other, but generally uptrend, at least technical, what we can see in a trend in it, can see in a market, the uptrend can continue. Still, we don't have too much reasons, maybe the correction, but that could be some correction, but the general uptrend still continue, especially for Dow Jones. 42,000 is very key level. Holding this level can continue the uptrend in the market. For the cryptocurrency market, this week the crypto market will be very important to be watched. We know that Bitcoin printed the new higher high, new all-time high, new records around 118,000, which means that still the demand in the market continues with the money flows from the ETFs. Still the demand is there and can continue still in the market, especially this lowering the sorry, especially with the lowering the market risk in the VIX chart, VIX chart. Now we can expect a little bit more positive reactions in the Bitcoin. We don't see still any sign of the lowering. Maybe some correction, but not lowering. However, we know that the Citibank and some other banks, they expect correction towards 100,000 before new all-time high. Now the pivot point sits at 109,000 US dollar. Yeah, that's what happened previous week and what we expect for the week ahead. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.